All right, good morning, good morning. Yo, yo. All right, folks, quick sound check here in the Essentials room. Do a quick sound check over on YouTube. And we've got ourselves a bit of a mover this morning. Mama market a little bit frisky. All right, y'all, we'll jump in here. Lots to discuss. So I did do a futures trade, and I did capture on camera. I didn't post this because I took it around. I think I opened the trade around 1:30 or 2 o'clock in the morning. So maybe not the perfect hour for a group trade. But nonetheless, I do want to start to post more futures trades. So this is pretty much as textbook as it gets. So we got the hourly chart here. And on the first hourly squeeze signal, or maybe it was a second or third, but back here in the hourly squeeze of the hourly buy signal, I sold a put credit spread. I did 45.65 short put. So I'm pretty much like right at the money. I did that for today's expiration, and the max loss was about 5,000. Max profit was about 2,000 bucks. So at this point in the recording, it's about 4 o'clock in the morning, and check out the signals here. 2-hour buy signal, 1-hour buy signal, 30-minute, 15-minute, 5-minute. We've got a 2-hour squeeze and a buy signal, a 30-minute, a 15-minute. Everything at 4 o'clock in the morning, looking poised for a push higher. Now, keep in mind, the max profit on that put credit spread was 2,000 bucks. So something I got to remind myself is my daily goal is 1,000. So now I'm at the point here where, no matter how much more the market goes up, from here the S&Ps could go up 2, 3, 4, 5%. I'm not going to make any more than 2,000 bucks. So if there is a downside, so to say, to the credit spread, if today's the strongest day ever recorded, I have limited my upside, and I've got to keep that daily goal in mind. So at this point, I'm at 1.3 times a daily goal. But the signals look good. Everything's lined up. No warning signs, no sell signals. And I think it was right around this point where I started to notice we had a 2-hour squeeze setting up. So I cashed in on the original credit spread, and then flip over here to the 2-hour. All right, so now we're on the 2-hour time frame. All right, 2-hour squeeze, 2-hour buy signal, little momentum cross. Everything looking snazzy. So I again sold the credit spread. And 2-hour squeeze pushes. We're pushing. Trying to see if we can get 45.90. All right, come on, old girl, a little bit more. And I think I'm cashing out here pretty soon. Yeah, cashed out right there. So, typical squeeze trade. Squeeze lines up. You've got a big 3 buy signal. And I think more importantly, guys, it's granted the market's a little extended. So in most normal markets, we're kind of at a point where some sort of pullback would make sense. But the point I'm trying to make is, for those of you in the mastery, we had a really good short entry the other night. 15-minute squeeze of the sell signal, 30-minute squeeze in the sell signal, hourly squeeze. So good entry, good signal. You're trying to get short in a really bullish market. So you get a little bit of a fade lower, a gentleman's pullback. The easier trade for the overnight trade for the credit spreads, if we're playing these 15-minute, 30-minute hourly squeezes, I think the easier trades are going to be the trades to the upside. So one thing that I put in my journal, because, we did. So we're getting short back here. We did have a little bit of a spot. Actually, we're getting short back here. So there's a Sunday night trade. 30-minute squeeze in the sell signal, and we sold the call credit spread. For what it's worth, it kind of worked. You're coiled up, squeeze break short. You pull back to about 2.5 ATR. We're in a really strong market. So if you do get short and things do line up, point I'm trying to make is maybe you don't bank on a huge pullback. Maybe you just bank on a little bit of a flush to support, and then think about getting long again. So same exact trade, same exact signal, just opposite direction. The bullish trade, a little bit more in alignment with the overall path of least resistance. All right, and then last thing here on the futures. So it's it's 7:30 in the morning. I'm almost at 2 times my daily goal. All right, job number 1 moving forward. Do not F this up. Meaning I forbid myself to end today, and at the very least, not walk away with my $1,000. All right, that's my baseline daily goal. I want to make $1,000. I'm up 1.8. I can take another trade, or I can look for more opportunity. What I can't do is go buy $2,000 worth of calls and watch them go to zero. So after closing those 2 credit spreads, now I'm at a point where if I want to pull the trigger on another trade, if I think there's some edge getting long or short, I can do it. But I forbid myself from losing anything more from. I forbid myself from losing anything more than $700. So what I did here, I took $300 and I bought a 4,600 call debit spread for today's expiration. And now I like the position I'm in. If the market pukes all day long, I'm going to lose $300 on this debit spread. Between the 3 trades, the first 2 put credit spreads and now the debit spread, no matter what happens, worst case scenario, I'm going to finish today with $1,500. So the worst outcome from here is I'm going to finish with 1.5 times my daily goal. Now, if the market does continue to rip face, and we're punching through 45.90, we're cruising to 4,600. It's a cheap out the money call debit spread that expires today. That $300 of risk could bring home another 300, 600, upwards of $1,000 of profit. But most importantly, when the bell strikes at 4 o'clock tonight, I'm not going to put myself in a position where I've given back all all this morning's gains. So I did want to show you all that. If you follow my stuff, it looks like pretty much every other trade I do. Why are we long Google right now? Because Google's weekly chart has that combo. We're squeezing and we're buy signaling. But all right, enough on the futures here. So we shall start off with Tesla, which you might have heard of. And over in the mastery, we've got a 250, 260 call debit spread for December monthly expiration. So December 15th. Now we are going to gap up this morning, pretty much right to that 250. So a few things to consider here. Let me do this. But yeah, a couple things to consider. The first thing to consider, and this is a bit more bigger picture, so I don't think it really applies to today. But what I will show you here is a weekly squeeze. We are getting pretty close here to a brand new weekly buy signal. So down here on the big 3 histogram, if they can push momentum back above the 0 line, we should be at the point where we get a weekly buy signal, at which point the upside target from that weekly squeeze is going to be something like 300 to 305-ish. So I do think there's a chance here the next 2, 3, 4, 5 weeks or so, this could turn into Google. And what is Google? On the weekly chart, Google's that perfect combo. Like the squeeze gives you the buildup of energy. So we already know Google's fixing to do something. Right? She's trying to bust a move. Green arrow tells us the EMAs are stacked positively. The momentum is lined up. Structure is bullish. Everything's lined up here for a big push higher. Now, had you have caught in that on the first weekly buy signal, the party hasn't even really started. All right, the squeeze hasn't fired, no breakout attempt, but you've already caught a good $5 or $6. So again, a little bit bigger picture. But if Tesla can flip the weekly buy signal on, I'd be thinking about March expiration, April expiration, something cheap up here at 300. 300, 310 debit spread, a little something like that. But now, as far as today goes, 250 could be a little tricky. So it's kind of like the only watering hole in the jungle, meaning everyone and their mom is gathered around 250. So that can make things, certainly pretty interesting. Could be a situation where everyone and their mama is buying those 250 calls. They push it to 250. They give you they paint the picture as if your dream is coming true, and then they dump it. Like, come on in, guys. Water's warm. Buy those 250 calls. Here comes the breakout, and then you're left with nothing. One outcome. And then for those of you following the spot gamma stuff, all right, 250 is a big call wall where I think things could get really interesting. And JC talked about this in his video last night. Maybe a chance for a little gamma squeeze kind of situation is if Tesla can punch through 250 and not look back. At that point, anybody who's short is screwed. The market makers might be in trouble. So yeah, I think to keep it simple, the thing to watch here for the next handful of days under that 250 level is going to be the 4-hour squeeze. And if they can't get it to fire, then maybe 250's big resistance, and we pull back and chop a bit. I would also argue if the 4-hour squeeze does fire long, and that all kind of works as advertised, we could go much higher than 250. So for the sake of our call debit spread, I do like that we have a few weeks till expiration. And then keep in mind the function of the debit spread. We're looking for a push through 250, ideally through 260. The closer that happens to December 15th expiration, the better. Meaning not the worst thing if we touch 250, pull back a little bit, we keep trading sideways in the 4-hour squeeze, and then maybe next week we're waving bye-bye to 250. So we'll manage that trade accordingly, and then I do want to buy more Google. Reason being, let me throw on my 21 EMA. But reason being, I think as far as a fresh entry, this one offers the best risk reward. So we'll go 21 EMA. All right, so from a risk reward perspective, and even better, you're right on top of that daily 21. So there's very few things in the market that look as good as Google. As far as buy signals, as far as the big 3 score, very few things out there that look this good. Trading this close to their weekly and their daily buy zone. Right, we've got Amazon's, Microsoft's, they're all somewhere up here. So risk reward wise off the weekly squeeze. Now you could take your loss a little bit quicker. But I would say at the very latest, you take off that long on a break of the weekly 21. If we're in a squeeze, if we've got a buy signal, if we're above that 21, this remains a valid setup. So long as that remains a valid setup, we should be looking for a push towards 150. So at the very latest, if you're taking it off down here at 130, you'd be risking about, we'll call it $5 to $6 to potentially catch closer to 15. Now think of how that's going to work in your options trade. Put credit spread, call, debit spread. You're buying in the money calls. You're buying out the money calls. You're doing a butterfly, really, regardless of what you do. Strategy-wise, if on the stock itself, you're wrong about $6 lower, and you're right $15 higher, I think you're on the right side of risk reward. You can take that trade 3, 4, 5 times in a row. Pretty good chance you only need it to work once, and you're still coming out on top. Now, can I do that with Microsoft's weekly squeeze? Not really. Microsoft would no longer have a good-looking weekly on a break under 340. I'm not trying to take $40 on the chin. How about, say, Amazon? Not as bad as Microsoft, but not as good as Google. So going back to Tesla, always thinking in terms of risk reward, I've got to watch the weekly chart like a hawk. As soon as we get a weekly buy signal, I want to buy those deep out the money calls. All right. Then think of my risk reward. Sake of conversation, we get our weekly buy signal at 250. All right, from there, I'm wrong on the weekly squeeze about $10 to $15 lower, at which point my upside target is about $50 higher. If I'm right, I'm going to make a lot more than I'm going to lose if I'm wrong. Microsoft is kind of at a point where I can't really do that. Now, I can do that, but that means I'm probably going to put my stop, $1 lower. I can't put my stop all the way down here at the weekly 21. If it could pull back $40, and for what it's worth, I don't think that's going to happen. But again, risk reward wise, it could pull back $40, still be a really good chart. Do I think it could go up $80 from here without a real pullback? I'm not too sure of that. So I'm liking Google. And I'm probably going to end up buying a bit more before the end of the week, assuming things don't change. And then a few more for you. The most important of them all would be QQQ. That's the one that matters. And that officially fired long as of Monday. So are we a little extended? Yeah. In a quote-unquote normal market, 80% of the time, are we at a spot where things would usually pull back? Yeah. 80-20 rule. 80% of the time, and it's probably closer to 90, but we'll call it 80, we don't have these big weekly squeezes. I would say 95% of the time, we don't have a weekly squeeze in a buy signal. So your normal market is anything outside of this combo. Right? No squeeze, no buy signal. We're just kind of trading in a big range. In that kind of situation, yeah, if we're this extended, you're probably looking for a pullback. All right, this is that 10% of the time. You've got huge compression, right? Giant buildup of energy. Everything points towards a move higher. Mind you, the last weekly squeeze never had a buy signal. You eventually get one right here, but not during the squeeze. So put that in its proper context. The weekly squeeze back here from April was not really aligned for a big push higher. What did it do? Takes the cues from 300 to about 380. Not too shabby. This time around, we got the buy signal inside of the squeeze. So back here, what do you have? You just have compression. This time around, what do we have? Compression, and then everything on the checklist, fully lined up. You have the same theme here throughout a lot of the stocks. Take Amazon, for example. The last weekly squeeze, which never got a buy signal, takes this puppy from $90 to about $1.40. Again, not too shabby. This time around, you got that juice. All right, so when's the last time Amazon had this combo? Had a few back here, a few back here. Again, doesn't happen too often. So that is what I'm looking at on the swing side of things. And just kind of day by day from there. And what I would continue to urge you to do, and I'll get caught up in the chat here and see what you got for questions. With things being a little extended, just get long in a fashion where, get long in a fashion where if the market does pull back, you don't want to lose your shirt. So if you've got 10, 15, 20% of your account in out the money calls right now, the first day we pull back just a little bit, that's going to hurt. If you're out there in March expiration, you've got 1, 2, 3% of your account in some out the money debit spreads. Then if the market pulls back, you really can't get too hurt. You're probably excited about buying it on the dip. And if the market does continue to push, if you have those calls on in an asymmetric fashion, kind of like my Google trade, I don't have big risk on here percentage-wise. But as far as the structure of the trade, if we explode through 150, I'm going to 3, 4, 5x the trade. So keep on doing that. Be mindful of your risk. And then I think most importantly, don't operate with the assumption we have to pull back. I think right now saying the market has to do anything is kind of dangerous thinking. But especially dangerous if you're saying it has to pull back. So it's kind of like right back here. On the first dot of the weekly squeeze firing long, we are sitting here saying, market's got to pull back. And a few weeks later, you proceed to rally another $70. Right? You can't fight that big weekly squeeze. So we could pull back, or we could keep on keeping on. All right, we check the futures here. Bunch of buy signals. We got a big old 4-hour squeeze setting up. Four-hour squeeze actually fired long here. But all right, folks, let me get going through the chat here, see what you got for questions, and then we'll call it a session. And then I'm going to be on the mic in the gold room at 1 p.m. Central. And I got a couple trade ideas to discuss, so I'll dual broadcast into the mastery. Okay, great question. What do I prefer? Credit spreads or debit spreads? So if my goal is to fully maximize the setup, meaning I want to get the best bang for my buck possible, I want that trade to really, really matter. That's where I'm thinking I'm going to buy a call or I'm going to do a debit spread. So a perfect example would be something like the Google weekly squeeze. This setup working looks like a push into 150. So if that does happen and I catch it, I want that to matter. What I found is that's the kind of setup where if you can hit 4 or 5 of them with with decent enough size, but you're doing that debit spread, you're buying those calls, 4 or 5 of these per year, that can make for most of your year. So what I don't want to do is on this kind of setup, sell a put credit spread where I'm risking 4 to make 1. If I catch my push to 150, I don't really feel like the put credit spread gives me the best bang for my buck. So for a swing trade kind of thing, a weekly squeeze, a 2-day squeeze, a daily squeeze, I really am a fan of just buying the call or doing the call debit spread. Now for my futures trading, where that's a bit more of a monetary goal versus fully trying to milk the setup, that's where I'm a fan of credit spreads. Where I'm coming in here this morning, I'm selling these puts down here at 45.65. Now I'm in a spot where if we explode, I'm in good shape. If we just kind of slowly grind higher, I'm in good shape. Hell, if we just chop above the hourly 21 today, it's going to be a long day, but I'm eventually going to get my $1,000. So for my futures trading, which is a bit more, income focused, so to say, big fan of squeezes and credit spreads. For the true swing trading, I'm a big fan of squeezes and long calls or debit spreads. So really, really good question. And yeah, RK, I can do that. I can do that for sure. All right, let me jump over to YouTube, see if you got any questions. All right, we do have a 5-minute squeeze coming through here. And if today's going to be a day where we just keep pushing, you look for a little break in the action. And then a lot of times that next 5-minute squeeze, that next 15-minute squeeze, that can trigger the next push to the upside. You can kind of see that this morning. All right, first push. A little bit of chop, 15 or 5-minute squeeze. Keeps the party going. Now, for all of you with the big three, we did hit 45.90. So we are kind of a stone's throw away from the big 4,600. My rule here for the rest of today, if I was going to put on another trade, I'd have to wait for another 5-minute buy signal. 45.90, 4,600's, your short-term top. The first sign of things slowing down here would be the 5-minute losing the buy signal. Like back here. Now, if they can print it again, they might just keep pushing. But yeah, I'd wait for that. I'd wait for that. So Fly Guy, hopefully as early as the end of this week or early next week. Okay, my man Kevin O'Toole wants to look at some Roku. Kevin, I know we had a weekly squeeze. It might have fired. Wow, yeah. Indeed it did. So weekly squeeze fires, bunch of buy signals. Everything looks really good, but it's not at a spot where I feel like I got a fresh trade. Which means it looks like most things out there. Structure is good, momentum is good. You've got a bunch of buy signals. Nothing pointing towards is going to pull back. Everything pointing towards it wants to keep going higher. But unlike, say, Google, I don't have it near a daily 21. I don't have it on top of the weekly 21. Everything looks bullish, but I don't have it at a spot where I can work that entry. So for me, Roku would end up on the same watch list as Meta, Amazon, AMD, Netflix, Microsoft, QQQ, SMH. That watch list being the buy the dip watch list. Now, maybe Microsoft, or Roku rather, maybe Roku never gives you that huge pullback. Maybe the weekly squeeze works as advertised, and we get 5, 6, 8 plus bars of momentum. So what I'm really trying to preach is, not so much that I think we can't buy things up here. We can buy things really wherever we want to buy them. It's just an aggressiveness thing. The closer to the daily 21, the closer to the weekly 21, the more aggressive I can be with my entry. As far as my strategy selection, as far as time till expiration, as far as position sizing. So right now, Google, on top of the daily 21, on top of the weekly 21, I can trade that a little bit bigger because it's really, really close to my line in the sand. On the Roku weekly chart, my line in the sand is $78. Right? I'm not going to have fun sitting through a $30 pullback. My line in the sand on the daily chart is $20 lower. Can I trade Roku up here and get long? Yeah, I can. Can I do that in a fashion where tomorrow, if this pulls back to the buy zone, I'm blowing up my account? Definitely not. So if I'm doing a 115, 120 call debit spread for March expiration, and I throw 1 or 2% of my account into that trade, it's not really going to be a big deal if it pulls back. If I go 20% of my account into a 120 call, that pullback's probably going to kill you. So just the aggressiveness scale. My aggressiveness scale goes up the closer we are to the entry zone. Right? It goes down, right, smaller size, the further from the entry zone. Yo, what up, Danny? What up, Danny? So, Brad, the trigger for the Tesla trade, and admittedly, not my typical trade, for sure, but it was a very, very, very early entry into the idea that the weekly squeeze is going to try to slingshot higher. So you've got your weekly 200, I think, somewhere down here. And the thought process really starts at the QQQ. The thinking being most of your big tech names, they're going to mirror the QQQ. So when the Qs, the Microsofts, the SMHs, and a lot of these big names, what we've been seeing from the weekly chart is that slingshot pattern. Meaning you have a squeeze, they break momentum lower, they break the structure, they pretty much get the squeeze to the point where it's about to fire short, and they never get it to fire short. The bears totally drop the ball. Anybody getting short feels a little bit trapped. So a more advanced version of this, or something a bit further along, so to say, would be a QQQ. All right, here comes the squeeze. Oh no, momentum is breaking below zero. Oh no, we're taking out the 21 EMA. Squeeze is about to break short, and boom, right back up you go. From there, the shorts are screwed. They keep pushing. So on the weekly close back above the weekly 21 EMA, we just bought that cheap out the money debit spread. Definitely not the typical trade. But like I was saying earlier, with a little bit of patience, Tesla could turn into the typical trade. They push momentum above zero. Weekly chart triggers a buy signal. Then I've got it right where I want it. But all right, y'all, I'm gonna let you go here. Make sure I'm not missing any questions. Hey, good morning, James B. Very, very soon, my friend. Very, very soon. Greg, I don't have a video necessarily on how I construct my debit spread. Here's what I can tell y'all, though. Pretty simple stuff. For my squeeze trades, my target is usually 2.5 ATR. So if I'm trading on the hourly chart, I'm looking for a move into about 2.5 ATR above the hourly 21. If the trade is weekly squeeze based, like a Google, I'm looking for about 2.5 on the weekly chart. So if I'm getting a good entry and I'm giving the trade plenty of time till expiration, I'll put the debit spread up there at that target. So Google, I'm looking for 150-ish. Now, mind you, by the time the squeeze fires, the target will be higher. So you are kind of eyeballing it along the way. But at a minimum, we're thinking 150. So that's where I'm going to put that out the money debit spread. I'll buy the 150 call. I'll sell the 160. And then it just goes back to, does the squeeze work? That would look like it fires long. And you're up here at 150-ish. So at that point, the out the money debit spread you bought for $1.50 or so, it's going for $4, $5, $6. Could be some juicy stuff. But all right, my friends, cash market opens up here in 8 minutes. We've got an electrician coming here pretty soon, so I'm hoping I don't get knocked out of the market. But all right, y'all, good stuff. And the team here at Simpler wants me to remind you about the Black Friday sale, which I believe comes to an end this Friday. So check that out on the website. 30% off of indicators, courses, subscriptions, autographed pictures of John Carter, and all the above. But hey, y'all have a good day. Be disciplined. And again, strike that happy balance. We've got weekly squeezes up the wazoo. Put yourself in a position where if 4, 5, 6 weeks from now they all explode higher, you want to be taking home some nice cash from that. You got to take advantage of it. Approach that in a fashion where if things got to pull back for a week first, you're not getting taken out of the game. So take Google, for example, and then we'll get out of here. If you buy Google today, buy it in a fashion where if this thing just takes off the top and explodes, you want to get a really good bang for your buck. So I like out the money calls or out the money call debit spreads. At the same time, if it pulls back a bit, I want to be in a position where I'm kind of drooling over the idea of buying a little bit more. But all right, y'all, thank you for your time. I will see most of you in the options room and the mastery at 1 p.m. Central, and we'll pick it up from there. Adios.